Hello there, you're watching Market Cafe on ET Now. A very warm welcome to all our viewers. I am Priyanka Uppal, along with me is Shyansi. Shyansi, US markets are coming off from the 3 weeks winning week, but India is not doing that bad. In fact, you know, the kind of moves we've seen now, Dow, and especially that it's fell for the 7th straight day on Friday. In fact, nearly 2% down Dow. Nasdaq isn't doing that bad. Indian markets are not doing that bad. But the major part of the cues will come from the Fed's meeting this week.
Well,
investors are awaiting that. So let's kickstart the show with US markets first.
Absolutely. Good morning and a very warm welcome back to you as
Thank
well.
You so
that just sums it up. But you know, when you take a look at the kind of week that we've had, the stock market is, of course, like Priyanka mentioned, coming off that sluggish week. Then the Dow lost 1.8% last week and has also lost ground in each of the last 7 sessions. When you take a look at the S&P 500, that's also the one that dipped 0.6%, has also retreated in 4 of the past 5 sessions. When you take a look at the Nasdaq composite, though, that's the one that's largely outperformed, grinding out a gain of 0.3% for the week. After a broad rally following President-elect Donald Trump's November win, you did have the stock market that appears to have reverted to a narrow tech-led move in the last few days. And in fact, in the last week, that is the kind of move that we saw coming in. Like Priyanka mentioned, again, the main draw of this week is the Federal Open Market Committee's meeting on Tuesday and Wednesday, when Federal Reserve officials are widely expected to lower the benchmark interest rate again. Now, the Federal Reserve is widely expected to cut rates by a 0.25 percentage point. But traders, of course, will be paying close attention even to the kind of updated policy statement and Fed Chair Jerome Powell's press conference for clues about what really comes next when it comes to the Fed's trajectory, then what they have in mind in terms of interest rates and otherwise what they think about the economic data that we've had come out in the past month gone by as well. On Monday, you do have investors that will be getting some updated economic data. Speaking of economic data, then with preliminary purchasing managers index readings that are due out before the bell as well. So that largely is the kind of handover that we're looking at. Of course, you do have Wall Street's bull run that has hit a December soft patch as well. So that is something that we're watching out for in terms of how this really plays out, because with less than 3 weeks left in 2024, you do have the 3 major market averages that are on track for a banner year. When you take a look at Nasdaq on a year-to-date basis, 32% is the kind of gains that one has managed to eke out, and even S&P 500, 26% gains coming in for that one. Dow also trailing but still up 16% on a year-to-date basis. So it's been a good year thus far. December is really just the rough patch. So let's see how that pans out, Priyanka.
Absolutely. Now let's talk about crude oil also, because you know, the oil prices, they have been largely steady, but then last week was a surprise when, you know, it fell by nearly 4 cents, nearly 0.1%. 72.79 is the mark. $72 per barrel is the mark where oil is trading right now. It was up 2% last week at a 3 weeks high. And of course, there are reasons behind it. The kind of sanctions coming in that looms on Russia, Iran, that's what causing that movement on the front of oil movement. Brent futures rose 1.5% nearly to settle around $75, precisely $74.49 per barrel. But if you talk about gold, silver, in fact, the kind of moves we've seen in crypto, that is remarkable. We've reached, we are nearly $105 on the Bitcoin. But then talking about gold, spot gold, that was down by 1%, but still it's trading at quite a remarkable level. It's above 2,600 per ounce. Spot silver, that one fell by 1.3%, nearly $30.55 per ounce. That's the kind of move we've seen. And yes, let's not forget that bond yield, it's again 7 basis point up, 4.4% is where bond yield, 10-year bond yield is trading at the moment.
Well, you know, absolutely. And since you mentioned crypto, Priyanka, you know, when Bitcoin has smashed through that $105,000 level for the first time, fueled by speculation that President-elect Donald Trump may designate it as a US reserve asset. Now, mind you, that is something that he's been talking about for a while, because he's been talking about changing the framework for cryptocurrencies as well. And you do have the cryptocurrency that has surged over 50% since Trump's election, both by his pro-crypto stance and reports of a strategic Bitcoin reserve fund. Analysts now also eye the $110,000 mark as Bitcoin remains in uncharted territory, up nearly 20% in just the last month. So that's the kind of move that we've seen coming in for Bitcoin as well.
All right, so that's about the Bitcoin, but then let's keep a watch on the events to watch. Of course, before the bell only in US, investors will get some updated economic data in terms of the PMI data that is due today. But talking about other cues in India, we have a PMI data to come in. Remember the kind of GDP figures which came in. Now the needle moves to PMI index. That how are things progressing on that front? Talking about UK, we have S&P Global Manufacturing and PMI data. So a lot of PMI data, purchases, manufacturing data is on the tap this week. From Eurozone also, there's a PMI data coming in. For China, the retail sales as well as the industrial production data, that will be on the tap. Talking in terms of Japan, we do have PMI data coming in from that front also. Talking about the other corporate action, we would keenly eye on Vedanta because the board is to mull the fourth interim dividend here. And of course, the IPO, in talking terms of IPO, the subscription watch on Eventress Knowledge Solutions. These are the kind of events in terms of corporate as well as the PMI data from the global data as concerned.
Well, absolutely, Priyanka. And you know, the one cue that we cannot look away from is that FOMC meet that we've been talking about. In fact, an important cues to watch then this week. The US Federal Reserve is widely expected to cut rates by a quarter point, like I said earlier as well, marking its last meeting under President Biden. Despite a recent inflation uptick, then the Fed is signaling a cautious approach to future cuts, balancing strong economic growth along with fiscal uncertainty ahead of Trump's return to the White House. And since September, the Fed has in fact lowered rates by 0.75 percentage points, aiming to support the labor market. Meanwhile, you do have the Bank of England as well as the Bank of Japan that is expected to hold rates steady in their policy decisions later this week. So it does look like it's the week of policy decisions.
All right, a lot of central bank policy meetings has to happen today, Shreyansi rightly said. But then talking about the British economy, that one shrank by 0.1% in the month of October, and this has missed the forecast of 0.1% of growth. Degrowth has come in. Now, weakness in manufacturing, construction, and even the mining, this one drove the decline, while services stagnated despite gains in telecom space. The Office for National Statistics noted sluggish performance in oil and gas space, retail space, as well as the hospitality sectors.
Alright, then shifting focus to Beijing, then China will continue its stimulus push according to the central bank as it plans to cut interest rates and reserve requirements in the coming year, according to a PBOC official. November's new yuan loans fell sharply, missing expectations and also reflecting weak credit demand. In fact, Beijing aims to boost growth with higher deficits, more debt and looser monetary policy, something that the Politburo also talked about, targeting 5% GDP growth for 2025.
All right, shifting focus to South Korea, which was the best performing market also last week. A day after South Korean President Yoon Suk-yeol was impeached, acting President Han Duck-soo reassured allies and markets that he is in talks with US President Biden, pledged stability in the country's policies and its alliance with the US. Meanwhile, the opposition has decided not to impeach Han, citing concerns over governance. We spoke to Professor Madhav Das Nalapta, Director of Geopolitics and International Relations, as well as UNESCO Peach, also he chairs at Manipal University in India. Let's listen into what he has to say on these key events in South Korea.
North Koreans moving at this point, frankly, they're more in a defensive mode. But certainly North Korea will be very happy because I think President Yoon took a very pro-Western stance. And for example, he unnecessarily got South Korea involved in the Ukraine conflict. He has sent weapons to Ukraine and antagonized Russia. There was no need for that because Ukraine was not really his problem. Neither was it the problem of Japan. Both in Japan and in South Korea, they made the mistake of going with the European line rather than understanding that they are Asian countries and the problem is in the Indo-Pacific. Their problem is not in the Atlantic. So Yoon made a horrible mistake in sending those weapons. And in my view, I think that would have been a trigger for action by all the elements who have been opposed to his policy of being very close to the United States. Don't forget, Yoon went together with the Japanese Prime Minister and the US President. They have a tripartite agreement. Now, Korea and Japan, South Korea and Japan coming together is very, very rare. Yoon went ahead with that in the broader interests of South Korea's security. he was right on that as well. So I simply want to say that the man was right in his assessment, his diagnosis of what the problem was, but the method he used was completely undemocratic, and therefore I think it was expected that he would be successfully impeached, because I don't think democratic governments should use martial law and bring the military in a civilian situation, especially when you have the history of South Korea, where there's so many years and decades of military rule and military oppression. The South Korean people are very conscious of that, and therefore I would say that that mistake was terminal, but I hope the person who takes his place will be an individual who frankly understands the situation and takes a resolute stance against the efforts of both Chinese as well as North Korean lobbies to infiltrate into South Korea and to disturb its social fabric and to frankly, create problems for its economy. South Korea's progress depends on friendly ties with other democracies, and whoever comes should have a clear understanding that Yoon was right, but his method was wrong. Well, he is paid for that, and now it's important that the right thing be done, which is looking after the security of South Korea from the South Korean point of view.
Well, the diagnosis was correct, but the method was incorrect, and that proved to be a terminal mistake coming in for former President Yoon as well, because he paid a heavy price for it with the opposition-led parliament's impeachment then, and that's the word coming in from Professor Madhav Das. But tell you what, let's get a move on then. The Trump transition team is pushing to scrap a car crash reporting rule opposed by Tesla, a move that could hinder oversight of automated driving systems. Tesla has reported over 1,500 crashes under the rule and faced multiple investigations. Based on the data, the recommendation, seen as targeting excessive data collection, could benefit Tesla if adopted, though it's unclear if the Trump administration will be acting on it.
All right, moving on. Ukrainian drones struck an oil facility in Russia's Oryol region overnight, setting a fire but causing no casualties, according to local officials. Kyiv's military said the facility supplies fuel to Russian troops, deeming it a legitimate target. Russia claims 11 drones were shot down, calling the attack a terrorist attack.
Alright, and those were all the global news and updates that we had for you bright and early this morning. But tell you what, on the other side of the break, we'll see you with the handover that's coming in from the Asian markets then, so stay tuned.
Welcome back. You're watching Market Cafe on ET. Now, let's get you a check on the Asian markets. A lot to come, as in Shansi was also discussing, a lot to come from central banks this weekend, including a lot of economic data has to come in from Asian markets, especially from markets like Bank of Japan has to hold a key meeting this week. Then the People's Bank of China has to hold a key meeting this week, and that's what will drive the markets this week. But then mostly the Asian markets are mostly climbing on early this morning. We've seen, but Nikkei is down by it's flat to negative right now. But then early morning it was down by 0.16%. It's trading with a negative bias right now. We're talking about South Korea's Kospi market, which was the best performing last week. Also, it was up nearly 1% in the early trade, but now it has also reversed now. It's down by more than 0.5%. Other markets, as far as Australia's S&P ASX 200 is concerned, that one started the day with a lighter note. It's down by 0.3%. Let's see, but then how GIFT Nifty is right now moving. Nifty implied is showing us a sign of a muted start, nearly 57 points down. But then talking about Shanghai market, that one has recovered. This was trading in with a flat bias, but now it has turned into a positive territory.
Well, absolutely. So that is what we have at hand when it comes to the Asian markets, and that's the kind of handover that we have at this point, though. But when you take a look at where we closed where we closed on Friday, then 24,768 is where we shut shop. And in terms of what the Nifty implied is penciling in, it does look like it is going to be a good start. But let's see how that pans out for us, because marginally so is what is being penciled in, at least in terms of what the Nifty implied then is penciling in. But tell you what, let's also take a look at the lineup that we have for you on the market at 9:20, we'd be in conversation with Mihir Vora, who's the CIO at Trust Mutual Fund. At 9:30, then Puneet Chatwal, MD and CEO at Indian Hotels, will be talking to us about the Taj brand's legacy, growth plans and global expansion plans as well. At 9:40, then, to discuss the growth roadmap of Mahindra Logistics, we have Ram Praveen Swaminathan, who's the MD and CEO of the company, who's going to be in conversation with us as well. So do keep an eye on all of those conversations that we have lined up for you.
All right, so Power Pack lineup coming up ahead. But
Welcome back. Thank you so much for staying tuned in. Let's get to some more news and updates then. And SEBI has proposed a framework to ease retail participation in algorithmic trading. In fact, according to the draft circular, then the facility of algo trading shall be provided by the stockbroker after obtaining requisite permission of the stock exchange. Then for each algo, we do have Anurag Joshi who's standing by with more details. Anurag, tell us a little more about this draft circular then.
Markets regulator Securities and Exchange Board of India has proposed a framework for retail investors to access algorithmic trading. SEBI has unveiled a draft circular and has invited comments from the public and market participants by January 3rd. According to the SEBI draft circular, retail investors can access the algos via stockbrokers, and this will be under strict regulations. The algos are to be tagged with a unique identifier, and this will be for better audit and monitoring. And stockbrokers must ensure a robust API security and with two-factor authentication. Now, algos have been classified under white box, which is the transparent logic, and the black box, which is the undisclosed logic. The black box, all algo providers are to register as research analysts and are supposed to maintain reports. The implementation standards are to be finalized by the stock exchanges and the broker forums, which are expected to also give their feedback to the draft circular of SEBI.
All right, thanks Anurag for getting us all of those important details. But let's move on and get you some important commentary coming in then. ONDC has reduced incentives to 40 lakh rupees in December then. And we did caught up with the MD Thampi Koshi to elaborate on this particular decision that has been taken by them. Let's also go across and listen in to a slice of that conversation then.
Initially, we are doing the investment for getting it up and running, and after that, in the long run, it has to be self-sustaining, because only then commerce will become meaningful. It cannot be working on freebies.
So, sir, between October to November, the transactions on ONDC grew from 14 million to 14.4 million, if I'm not wrong.
13.9 million to 14.4 million.
Okay.
And in a strict sense, if you look at that, it's not a very... Actually, you look at a per-day transaction, because November had 30 days, December has 31 days. November has 30 days, October had 31 days.
Right.
So if you divide that, you will see it is from about 4.4 lakhs to 4.8 lakhs. And as of in the last 1 week, it is doing an average of 5.2 lakhs per day.
So my question really was, is this in line with the growth that you had charted out for ONDC?
We had no idea how ONDC will grow, but we know it. See, look at this way. Last year we did 5 million, this year we're doing 15 million. So 3 times growth, which is for a young enterprise like ONDC, who is implementing a completely new idea, globally first idea, without any such huge media budget. I told you what's the kind of media budget that gets thrown around. When 10,000 crores last 1 year, only in media budget is not the kind of thing that a network like this do. That is only for the large e-commerce company with deep pockets. So we believe that it is like 3 times, and by next year, this time, it should be at least 5 to 7 times of this. And that's how any new idea should grow.
Right. Any updates on levying a transaction fee that was discussed a few months back?
No, that's what we said. We already announced that we may have a small per unit transaction network development fee of something like 1 rupee 50 paisa per successful transaction, which is about 250 rupees, and the small transactions free.
When is that expected to be?
We are planning to start that in January. We have already announced that.
Yeah. And any plans on foraying into the quick commerce segment for groceries and other items?
See, if you look at today, if you look at the food platform, there are quick commerce platform, there are e-commerce platform, they are all platforms with a very limited focus. This is a network. So there could be some sellers who will already provide their products and a very fast delivery, and there will be some buying application, help them to buy. In fact, I just got a message from one small company who had just started up, say Kirana Pro. He said that he's already doing 15 minutes, he will be able to do it in 10 minutes soon. So this is a network. So you will have some of them who will be doing very fast.
All right, that was an exclusive interaction what we had with the ONDC chairperson. Moving on, Kotak Life plans to expand its presence and foray into rural areas by identifying Gram Panchayat in 2025. Listen in as MD Mahesh Balasubramaniam shares the plans with my colleague Astha Chopra.
Data analytics has been at the center of our claim settlement policy onboarding for quite some time. We do have our own internal risk scores which we look at. We look at back data to see how the customer who's coming in, what kind of risk profile he's got, and thereafter we are able to do an underwriting based on data coming in. And we also look at our claims performance in the past, to look at frauds, to look at what kind of profiles we have written in the past, and thereafter see how we can incorporate that whole learning curve in the future underwriting that we do.
So just one more question. What is your company doing in order to get into the rural India part of the time? Because as we just discussed, there lack of awareness.
Yeah, see, we do a lot of microfinance insurance, micro-insurance through the microfinance portfolios. I think the regulator has also come up with a new program for rural and social obligations of life insurance companies. So about 25,000 Gram Panchayats have been identified, and all of us have to pick up the Gram Panchayats that we would like to penetrate. And that work is already on, and we are seeing some very good results coming in.
All right, then moving on then, in the 10th edition of the India Economic Conclave, where we discuss the economic agenda of the nation with the biggest policymakers, economists, as well as leaders, we've got you a whole host of voices coming in from across the board. Let's go across and listen in to some important commentary coming in from that particular event then.
For me, one is the new technologies are dematerialized and they scale up so fast that they become available to the poorest of poor. And that's where most of the wealth will be created. Earlier times, the wealth was in physical people. That's why it's called capita. What do you mean by capita is number of heads you had. Then it became land, and now it's becoming the new games, new experiences which you will create virtually. And for me, the next 50 years will create more wealth out of those newer things.
India really has once in a generation, once in a lifetime opportunity to get manufacturing back, which we completely missed. I mean, if you see the history of the world, countries go from agri-society to a manufacturing to services. We leapfrog from agriculture to services, but we miss the middle of that. There's a possibility in next few years, and now that the relationship between the two countries are improving, there's a possibility that I think over the next several years, we have a lot of opportunity in that space, what India can manufacture, not only for India, but also for the rest of the world.
India moves up from, I think, as we'll move to a $5 trillion economy, per capita income will move towards, $3,000, $5,000. The household savings will increase. And Indians, unlike the Western world, they love to save. They save for themselves, they save for future. Anything to do with savings, I think anything to do with wealth management, anything to do with the stock market, I think those are the companies and the sectors that I believe will do well.
I think India is going to be a wide sector participation. So diversity equity funds will be the best actually to play the India story.
The economy needs to grow nominally at almost 13%. That means the financial sector normally needs to grow 1.5 times. So 18% growth in financial sector is important. Till now, the best that we've done over a period of time is 15-16% growth. So this additional growth that we need is where an NBFC can play a very important role. More so when you said that to reach the last mile, it's difficult for a bank to do it. And that's where NBFCs also can play a role.
AI will go everywhere. It is the thing. It is analogous to as significant and impactful an event as the founding of the internet, according to me, Gen AI. It will go everywhere. Now you have to go into in a nuanced manner to figure out what impact will have on which sector, which company, and so on and so forth. But it will go everywhere.
If you don't incentivize research and you don't reward research, which means you take a much longer lens. If we're not going to do that, we're not going to get the kind of companies, and we'll always be copying more than having the core IP. So I think for us to move, I love your theme, fast track to 3. We should dream of being 1, and for that we'll have to innovate much more. We'll have to invest in R&D, and from policy point of view, I think we'll have to give more incentives.
2 साल के अंदर इंडिया की लॉजिस्टिक कॉस्ट सिंगल डिजिट में यानी 9% पे आएंगी. अगर ये 9% पे आएगी तो 7% हम कम होंगे तो एक्सपोर्ट में हमारा एक्सपोर्ट 1.5 गुना होगा और हम और कॉम्पिटिटिव बनेंगे. और इसमें सबसे इम्पोर्टेंट रोड जैसे ऐसे बन रहे हैं वैसे फ्यूल पे भी हमने काम किया है और इलेक्ट्रिक, इथेनॉल, मिथेनॉल, बायोडीजल, बायो LNG, CNG और हाइड्रोजन इस पर तेजी से हम काम कर रहे हैं.
I think by the time we close the year in March, we'll be back on track. Reserve Bank has estimated, IMF, Moody's, Reserve Bank all estimate about 7% growth. This year will continue to be the world's fastest growing economy despite such global challenges.
First pillar is massive public investment in social, physical and digital infrastructure. Second pillar is huge focus on manufacturing and innovation. And the third pillar is, since our society is very diverse and especially on the economic scales, there is huge diversity. So the third pillar is basically large number of programs which are creating a very inclusive growth. And the fourth pillar is simplification. And because of this very clear thought process, and because of the execution which has happened in the last 10 years, we are well set to become one of the top 3 economies in the coming years.
Welcome back. You're watching Market Cafe, and now time to take a check on the stocks that could be buzzing in trade today. Ria is joining us with all that list of stocks. Ria, morning.
Yes, good morning. So let's take a look at the stocks that are going to be in focus today. First up, we have Reliance Industries. Now, they have acquired 57.12 crore equity shares, which represents about 74% of Navi Mumbai Integrated Industrial Area Private Limited, or the NMIIA, at a price of rupees 28.5 per equity share, which aggregates to rupees 1,628 crores. And with this acquisition, NMIIA will now become a subsidiary of the company. We also have 2 pharma stocks in focus. The first one is Biocon. Now, the European Medicine Agency's Committee for Medicinal Products for Human Use, or the CHMP, has issued a positive opinion recommending the approval of a drug called Yesintek. There's also Lupin in focus, since this company has acquired 3 significant trademarks from Boehringer Ingelheim to strengthen its diabetes portfolio. There's also ONGC in focus today. Now, they have issued a clarification regarding the likely public listing of ONGC Green Limited, and the company has said that any decision regarding a public listing remains for the future as and when decided by the ONGC board, and at present no concrete plans have been made for a listing. Mazagon Dock has also issued a clarification referring to the news regarding the 6 submarines under the P75-1 project, and the company has said that the information that has been circulating is unconfirmed, and no information in this regard has been received by the company from the Indian Navy or from the Ministry of Defence. Lastly, Max Financial, the corporate name of Max Life has been changed to Axis Max Life Insurance Limited. So keep your eye out on all of these stocks today.
Absolutely, lots of stocks to watch out for, Ria. But while you're with us, there's electronics contract manufacturer Dixon Tech that has inked this joint venture with Chinese smartphone maker Vivo. They've entered this particular joint venture to manufacture smartphones, in fact, for the smartphone brand as well as others. So tell us a little more about this joint venture. I believe Dixon Tech is going to be having a majority stake.
So Dixon Tech has announced a proposal of a JV with Vivo Mobile India Private Limited. Now, this JV is going to undertake the OEM business of electronic devices, including smartphones. Now, if you take a look at the capital structure of the JV, Dixon is going to hold 51% share and Vivo will hold the remaining 49% stake. But neither Dixon nor Vivo India will have any stake in each other. Now, this JV is also going to undertake part of Vivo's OEM orders of smartphones in India, and they are also going to engage in the OEM OEM business of various electronic products of other brands. Now, Mr. Atul Lal, who is the chairman and MD of Dixon, has commented on this JV, saying that this JV will further strengthen Dixon's strong foothold in the Android smartphone ecosystem, and this partnership also has immense potential to deliver sustainable growth. Now, Dixon makes smartphones for nearly every top smartphone brand, including Samsung, Xiaomi, Motorola, Oppo, and Google. So keep your eye on Dixon on the back of this news flow.
All right, thanks very much, Ria, for that extensive detail on this particular JV. Dixon could be in focus today, but what are the key takeaways from the FNO segment? Ansh is joining us. Ansh, tell us the kind of move we've seen on Friday, the reversal which we saw on and the range that we saw on the intraday basis. What have you concluded from the FNO? How is FI's position faring right now? What are retail doing?
Yes, we saw very strong recovery in the market on Friday actually, but FI, they are again right in the market because they have bought in the cash market. Also in index future, they have added around 4,500 long contract. They have actually covered around 3,000 contracts. So net to net, we are seeing addition of around 7,500 contract on upside, due to which the total long position has gone above 41%. Now, if we talk about Nifty, then Nifty took a strong reversal from that 20 DMA level, giving an up move of more than around 600 points to cross above that 100 DMA level, which is a positive sign. But if you see on chart of Nifty, Nifty has been taking strong resistance around that 100 DMA from last 6 to 7 consecutive sessions. So we need to stay above this 100 DMA to be on a positive side. Now, if we talk about index futures, then we are seeing open interest going down by around 2%, indicating short covering, which is again a positive sign. Whereas on option fund, we are seeing most active call buying is happening directly at 25,100, indicating a huge range here. Whereas on downside, we are seeing most active put writing happening at 24,500. So 500 to 600 range is what option traders expecting for the week. If we talk about Nifty Bank, then Nifty Bank also took a strong reversal from that 20 DMA level, giving a closing above just below that 53,900, which is the key resistance. If you see on chart, Nifty Bank also has been in a strong consolidation phase. We need to cross above that 53,900 to be on a positive momentum. If we talk about index future, then open interest has gone down by around 3%, indicating short covering, which is a positive sign. So if we talk about stocks in focus, then here we are seeing significant long build-up happening in Paytm, Adani Energy and MGL, where a short build-up is happening in Poonawalla FinCorp, Adani Green and CG Power. So keep an eye on the stocks.
Well, absolutely, Ansh. We'll keep an eye on all of those counters that you've mentioned for us as well. But tell you what, even the real estate pack is going to be the one in focus, because the real estate developers in Bengaluru are facing regulatory hurdles leading to postponement of launches. We also have Snehi who's joining in to tell us what HDFC Security then is thinking about it, and which are the stocks that are likely to be impacted. Snehi, over to you.
Well, absolutely. So, the real estate space is going to be in focus today on the back of this HDFC Securities note, wherein they're flagging off some concerns coming in for the Bangalore-based developers. These are likely, namely Sobha, Prestige Estates, Brigade Enterprises, as well as Godrej Properties. Now, they're saying that a lot of regulatory hurdles are coming in the way of these Bangalore-based developers, and that is leading to some launch delays. This could also lead to some potential financials getting impacted of these companies as well. They're saying that these developers are facing several hurdles in getting the necessary approvals. This is on the back of the complexity that's related to RERA and also certain changes in the bureaucracy that the southern part of the country is seeing. They're also seeing that there could be some consequences of these delays on the launches as well as the financials of the developers. There could be some delayed revenue generation, could be missed market opportunities, and also could lead to some negative impact on the market share coming in. Now, a lot of the developers have expressed this grievance when it comes to their Q2 FY25 earnings calls. So all of these South Indian players have also been complaining about the delays that are taking place in the business on the back of these regulatory approvals that are getting delayed, and on the back of that their launches have also been pushed to subsequent quarters going ahead. Now, strained finances and some liquidity impact is what is expected. This could also lead to some reduced profit margins, lower project pipeline development, as well as financial challenges for these companies. But when it comes to their sectoral picks, then the top picks for them remain Prestige Estates and Sobha. They believe that Godrej Properties may not not see much impact coming in from these regulatory delays in Bengaluru. Also, Godrej Properties is expected to see some re-rating on the back of their fundraising that they've done. So they've maintained an ad rating on Godrej Properties with a target price of 3,000 rupees, maintained a buy on Sobha with a target price of 2,639, maintained a buy both on Brigade Enterprises as well as Prestige Estates. For Brigade, the target is 1,400 rupees per share, and for Prestige, it is 2,060 rupees per share. So that's a note coming in from HDFC Securities, flagging slight concern when it comes to the South India-based developers.
There could be some concerns for the South India-based developers. However, HDFC note also talks about Godrej Properties still getting immune to such constraints. But Sneh, do stay with us and do tell us about the action from the primary market, because we know that the International Gemological Institute IPO, which is open for subscription, and this one is aiming to acquire the entire stake in IGI Belgium, IGI Netherlands from the promoter. Tell us more details on this.
Absolutely. So let's talk about this International Gemological Institute IPO. That this IPO has opened on Friday, which is the 13th, and it is going to close on 17th. The expected listing date of this is also going to be on the 20th. Now, the price band for this IPO, lower side is 397 rupees per share, and on the upper side it is 417 rupees per share. The issue size is a total of 4,225 crores, out of which 1,475 crores is a fresh issue and 2,750 crores is an offer for sale. Now, IGI India, which is the India arm of this parent group, was incorporated in February of 1999. The primary business of this Indian group is provision of service related to certifications and the accreditations of natural diamonds as well as lab-grown diamonds, studded jewelry, and also colored stones. They also provide some educational programs and certifications as well. When it comes to the allotment of this IPO, 75% is reserved for QIBs, 15% for NIB, which is non-institutional buyers, and 10% for the retail group. Now, when you take a look at the objectives, why they're doing this IPO, the primary objective is to pay for the acquisition of IGI Belgium Group and IGI Netherlands Group from the promoter. Now, remember, this is a Blackstone owned company. 100% of it is owned by Blackstone right now, and the subsidiary BCP Asia 2 Topco Private Limited, which is an arm of Blackstone, owns both of these Netherlands and Belgium groups, and the total cost of this acquisition is going to be 1,300 crores, and the remaining 175 crores is going to be used for general corporate purposes. Let's understand what this acquisition is shaped like. First of all, IGI India manages operations in India and Turkey. You have Belgium and Netherlands that handle all the operations of the IGI group outside of India and Turkey. Now, BCP Asia owns 100% of IGI Belgium and Netherlands. The company plans to acquire this stake from for the IGI Belgium and Netherlands business. Remember, Belgium owns all the operations in Antwerp, Belgium, as well as USA. Netherlands groups, they own the operations in Bangkok, Dubai, Hong Kong, Shanghai, Israel, and Egypt. So once the India arm of the IGI group acquires Netherlands and Belgium, it automatically gets control of all the global operations of IGI. So that's going to be a big acquisition, and most of the IPO proceeds are going to be used to fund this acquisition.
Well, absolutely. Thanks, Steve, for getting us that particular roundup. Now, that Blackstone-owned company gearing up for the Dalal Street debut on December 20th. And there you have it, all of those important details. But tell you what, before we wrap up for the show, speaking at the 10th edition of India Economic Conclave, Jim O'Neill, former chief economist at Goldman Sachs, as well as creator of the BRICS acronym, said that the domestic demand is the one that is driving India's growth. In fact, he also talked about what India's aspiration then should be for GDP growth. Let's go across and listen in to what else he then had to say.
India's growth has frequently been driven by domestic demand. That means India is in control of a lot of what happens to India. To some degree, and we saw this in 2008, when there was a global shock, China had to dramatically change parts of its policies. Otherwise, the Chinese economy would have become a lot weaker a lot sooner. And look at Japan in that sense, far too dependent on things that are going on outside the country. Another example close to me in Europe is Germany. Germany, amazingly, has grown even weaker than the UK since COVID. And it's primarily because of Germany's vulnerability to things it can't control, like China, like the emergence of electric cars. So suddenly Germany has lost its global edge. India doesn't have that issue. unless we have a collapse. If we had a collapse in the internet and global outsourcing and global services, who knows what happens out there, but that would be a risk. But I don't think India is as exposed to some of these other issues as many other parts of the world. It is obviously vulnerable to a very large rise in oil prices and commodity prices. It's probably vulnerable to, if we had an unexpected big rise in US interest rates. The markets right now are expecting them to come down. But in that sense, I think India is relatively protected about some of these really big risks out there, which I agree are sources of great uncertainty for many countries.
So, Jim, if I just put all the ingredients in the melting pot, which is India's macro stability,
yeah,
political stability,
yeah,
fiscal deficit is coming under control.
Yeah.
More importantly, we have a population which understands English, which is the business language of the world, and the first one which you alluded to, which is the young population, where the entrepreneurship seems to be coming back. Do you think 6 to 7% growth for India could be there for next couple of decades?
So, as I think you know, and again, on the journey coming here and preparing for it in the past 2 weeks, I was reading some of my old research. This is something from 2007. The 10 things that India needs to do to reach its potential.
All right, that was quite an interesting conversation at the IEC event. With this, it's a wrap on this edition of Market Cafe. Thanks so much for watching, but don't go anywhere as Market takes all the action ahead.
If you like this video, then like, share and subscribe to ET Now.